successful in life gravitate towards the standard of excellence, not the standard of acceptance. So, for starting a new chapter of learning, I, Namneet Kaur Grover, being your host for today's event, want to extend a warm greeting and good afternoon to all of you present here. I hope you all are doing amazing. On behalf of the whole SEMS family, I, Namneet Kaur Grover, welcome you all for today's international webinar on the topic Importance of Company Law and GST Law in Indian Corporate Scenario. And to add our guest of honor and today's speaker, Ms. Ritika Gabhe, ma'am, it is a great honor to have you with us. We are grateful for your presence. Also, I see a quite number of people joining with us. Before I proceed, let me take a brief moment for the introduction of my organization. SEMS. Welfare Foundation is a non-profit entity established to work in the area of education, social welfare, women empowerment, skill development, and entrepreneurship, livelihood generation, and employability, health, research, culture, international cooperation, sports, environmental protection, or any other similar sectors. We promote healthy lives, a balanced and active community, and strong businesses. So, let me introduce today's speaker to you all. Ms. Ritika Gabe is a commerce graduate along with chartered accountancy and company secretary pursuant, along with upcoming masters from United Kingdom in the field of management and finance. She is a public speaker and has won various debate and speaking events across the nation and was invited as a judge by some top B schools like NMIMS Mumbai and Xavier's College Kolkata as a jury member of their National Debating Fest.
Good evening, everyone. So today we have the topic importance of GST and importance of Companies Act 2013. Thank you, Namneet, for inviting me and having me here. And it's a very honor to have an absolute amazing session with you all. And I firmly take it as a pleasure and the moment of gratitude serving with you all today over here. And it's amazing and it's really a pleasure. So once again, thank you all for joining, and I hope that this session helps you all to get a clarity on corporate laws, GST laws, and much more about the topic. So if I'm not wrong, all of you have already researched some or other bit of the topic very well in advance. First of all, we have this session divided into two different parts. One is the Companies Act 2013 and the other is the GST Act. So yeah, as you all know, first of all, I'll proceed with Companies Act 2013. So Companies Act 2013 was introduced in India as a formulation of the previous law, Companies Act 1956. Okay, the law which was already passed, Companies Act in 1956, was reintroduced in Companies Act 2013, which applies to all corporate entities and all the different kinds of sectors in which companies do play an important role, including the private companies, public companies, statutory companies, registered companies, banking companies. It applies to all, but the exceptions are there because banking companies, insurance companies, and other companies do have separate acts for them. So there's a Banking Regulation Act for banking companies separately. So I think that's where Companies Act does not apply to what much extent. But yeah, okay. So like it all started in 1956. Companies Act was already there in 1956, but it again reformulated in 2013 by Mr. J.J. Irani. J.J. Irani was a former partner of Tata Group in 2013, and he laid down the foundations of Companies Act, why it was important. And here today, we are definitely going to discuss the importance of Companies Act. Why is it so important for a country like India? Why is it important for a corporate sector like India? Okay, so let's begin. First of all, when we discuss the importance of Companies Act, we definitely do discuss why it was made, why there was a need of the legislation or there was a need of law called Companies Act in India. Okay, so like as I already said, India needs development time to time. Okay. In economic policy 1992, when economic policy 1992 was introduced, liberalization, privatization, and globalization, which actually gave boom to private sectors and sectors across the world, which definitely liberated lots of policies of trade and commerce all across the world, including India. So, in such scenario, when there are diverse commercial activities taking place on a very, very large scale of turnover and revenue, therefore, definitely there's a need of a regulation or a strict law to regulate the entire happenings of companies and the private sector and all the entities wherein profit-oriented operations are taking place. So therefore, there was a need of Companies Act and it was rightly formulated. Now, when we further discuss about Companies Act, how it actually works and why it's so important for a corporate scenario of India. Okay. So first of all, I would definitely suggest you to read, the applicability of Companies Act. It's so wide that this session may also feel short to discuss all the things to an extent. But I'm definitely sure I'll bring out some important summary points or just for you to understand it in a more simpler way. All right. So yeah, Companies Act applies to all the legal entities. First of all, okay, companies will discuss the applicability. So, Companies Act 2013 applies to all the entities registered in India. Okay, and it definitely applies to the principal single entity concept, wherein the entity and the company itself is different. Okay, no company and no entity can be confused as a same entity. It follows a concept of separate legal entity, wherein a company and the person who is handling it is a different. Okay. Number two, that company is a going concern. Company will go. No matter where the CEOs, the directors, or the employees of the company they die or they shut down. Company is separate, so the operations are also separate. Therefore, it's a legal concern. It's a going concern. Okay, and apart from that, company definitely means a very very wide term. It was surrounded, or it came from a very Latin term. Cum means bread. Cum means a group of people, a company, and penny means something which is associated to earn money or bread. So in that way, it was formed as company. So that's why there's an importance of company when we deal in context to Companies Act. And therefore, we are here today to discuss it. Because when we learn about a lot of things going around us. We see that the IPOs are coming, the companies are getting listed, because when we talk about when we grow up, we definitely do all have the excitement of knowing what actually goes around in the corporates, especially the ones who are from the commerce background. So we definitely have the excitement to know like why there's a concept of company, why there's a concept of IPOs coming up, lots of news of share market, finances, lots of profits happening. This company is recording profit, this company is recording loss, lot of things. So simply it means that Companies Act regulates the entire operations of the market. It regulates the entire, the happenings of the day-to-day culture of the corporates in a way that all the corporate governance takes place very transparently and very properly. When we talk in legal terms, companies do definitely make, ensure ensures that there are a lot of things coming up. There are lots of amendments that come to place. If somebody has heard about act, there is also amendment that takes place. There are circulars that come on a daily basis requiring that okay, such and such things are happening, these changes are being made. For example, if you're aware of the current finance minister, Mrs. Nirmala Sitaraman, she recently passed a budget, a union budget. Union budget was simply passed by Ministry of Corporate Affairs, and it says that all the expenditures and revenues of the government, how they are going to be handled. So how they're going to be handled is a part of separate legislation or a separate act. But what is more important here is how these expenses and revenue models are going to work. Because unless and until you don't know how and when we have to apply company law, what is the applicability and why is it so important, you're not going to understand why that was working and how it actually impacted you or your company. For example, if you dream of making a company for yourself, you want to register a company, you should know the compliances, how it's going to be work, how you have to make it listed on a stock exchange, or you simply have to register with the registrar of companies situated in your location. You have to go there simply and understand that how my company is going to be registered and how am I going to start the operations. All right. So in the scenario like India, wherein lots of corporate affairs take place on a daily basis, lots of companies are founded, lots of startups are coming up, lots of banks are made, lots of companies are dissolved. There is a big process, So one by one, when I discuss about Companies Act, I already given you the background why it's so important to learn. Now, one by one, we'll come to different contents of Companies Act. All right. So number one, we already discussed the introduction and how companies are important, why there was a need of Companies Act, who made it, when it was founded. We have all learned this very well. Now we are moving to some contents or some components of Companies Act. What are the topics that are being covered under the Companies Act and how they are going to be helpful for us to know in general as common people. Number one, there is a Schedule 3 in Companies Act, which is very, very important. When we want to invest in some company, for example, if I'm a naysayer, I'm a common person and I want to invest in so and so company. For me, Schedule 3 becomes very, very important. You go on any website and under Section 92 of Companies Act 2013, annual return is made, and every listed company in India is required to host its annual report on the website of company, on its respective company, actually. So in that scenario, for us as a common citizens, it is important to know that annual return at the end of the year is required to be hosted on the website of company under Section 92 of Companies Act 2013. All right. So when as common citizens, I want to invest in some company, I'm just mixing a pinch of finance over here for us to understand more comprehensively and how it's going to be useful for us in general. So when I, as a normal person, want to invest in so and so company, what am I going to do? I'll just make sure that how are the financials of the company? Okay. How is this company financially strong? What is the debt to equity ratio of that company? Why am I required to invest in that company and not this company? I have two options in front of me. One is ABC Private Limited, one is this XYZ Private Limited. So how am I going to choose that? You know, how it's important for me to choose this particular company or that. I'll definitely go to the financials. All right. I'll go to balance sheet. I'll go to statement of profit and loss, the cash flow statement, the consolidated balance sheet. I'll go to all those statements. I'll read it all very nicely. I'll understand each and every content of that particular statement. And this is actually prepared under the requirement of Companies Act 2013, because as per Schedule 3, it is clearly mandated for each and every company registered in India to maintain all the financial statements as per the requirement of Companies Act only and no other acts. So you know how this act is helpful for us to know as normal people, because no matter what, you in India or you in anywhere or the other want to invest in some company some point of time because you want to have an additional income for yourself, for example. So you definitely have to go to the financials of the company at one point of time. So I think that's where Schedule 3 of Companies Act plays an important role. And this way, this this is a very common example of us understanding the Schedule 3 and us understanding the concept of financial statements here, because financial statements as per Section 128 of Companies Act simply contains balance sheet, statement of profit and loss, cash flow statement, notes to accounts. So this means that how they are going to be mandated as per accounting standards. They should be true and fair. They should be audited at the end of the year by a chartered accountant, by an auditor. So if that all things are properly mandated, properly maintained, then I think that is the reason why we should invest in that particular company, and why and how the importance of Companies Act comes as to us very naturally, and it's very fundamental to know to each and every common person like me and you. Okay, now coming to a different component of Companies Act, which I think very will be useful for all of you to know. There's a concept of you if you have heard, if I'm not wrong, there's a concept of Insolvency and Bankruptcy Code 2016, IBC 2016. This was a code that was implemented back then to ensure simpler compliance requirements for the dissolution and for the winding up of the companies. Winding up procedures were already there in Companies Act 2013, but more importantly, what has happened that IBC 2016 has also came. Okay, so IBC 2016 simply means that the operations or the things that come to dissolution of company are made very simpler. If you go through the IBC Act 2016, you will understand that if a company is formed in so and so manner, the its dissolution becomes very tough at times. The compliance becomes very tough. So for simplifying that, IBC 2016 was enacted, and it's it has worked so far very amazingly for liquidation purposes, for closing down the operations, because earlier the NCLT was also there. For all of you, those who don't know NCLT, that's National Company Law Tribunal. For any legal body which is registered under Companies Act, has to go for any grievances or any complaints or any kind of cases, disputes to its NCLT of the particular area. And NCLT is the body who governs the entire practices, or who covers the entire operations of certain act or certain area jurisdiction wherein a case was held. So in that scenario, NCLT will only ensure that how the operations were conducted in that company, how the judgment has to be made, because no Supreme Court, no High Court can intervene between the operations of company. That is NCLT, who is the prime sole legal body in action for any operations or any complications in the corporate sector or in any sort of company, whether it's a private company or a public company. Okay, so as all of you know that there are two types of companies in Companies Act 2013. One is private company and one is public company. So for those who don't know private companies are simply, as per the section 2 and the definitions of private company, simply means that this is a company wherein there are maximum 200 number of members, and public company simply means that there's a restriction, and in private company there's a restriction on transferability of shares, there's the restriction on voting rights, and lots of things are different between a private company and a public company. You all must have heard any company starting with Reliance Private Limited or Reliance Limited. When it comes to word private limited, it simply means that it's a private company. When it's only limited, then it's called as a public company. For example, Avenue Supermarts Limited, which is a holding company of D Mart, if you have heard. So D Mart has a company called Avenue Supermarts Limited. So it's a public company. Or when it comes to Domino's, we all like to eat pizzas, so it's Jubilant Food Works Limited. So again, it's a public company. So in that way, we can decide how that company looks like on a stock exchange. It's a private limited, or it's a public, a limited company, or a private company, public company or a private company. So there's simply two types of company, and that's how we decide how the performance of companies depended. So we discussed about the introduction. We discussed how it was made, why was it needed in the current scenario, how financial statements are helpful for investors who know Companies Act, who need how to read those financial statements, or who do understand the applicability of such laws. We also understood about NCLT, who is the legal body under the Companies Act to look after a watchdog, the entire operations. We also discussed about public and private companies. In public companies, there are no limits of members. As many as members can be there. But in private company, there's a restriction of 200 members. Shares cannot be freely transferable. Company cannot accept deposits from public and cannot issue an IPO. So in that way, there's some distinction between private and public company. We also discussed about winding up. We also discussed about IBC 2016, which is a very recent amendment, or which is a very recent phenomena taking place in the corporate sector, the winding up, the dissolution procedure. SEBI is Securities and Exchange Board of India. SEBI is a body which governs the operations of stock market, how the investing is taking place. Because if you're not wrong, you must have heard the famous example of Harshad Mehta, scam 1992, which happened because there was a negligence from the point of view of governance, from the point of view of strict legal eyes on the investor, Mr. Harshad Mehta, who had a company called Grow and Rich Private Limited. He himself made a company of stock exchange. He made different promises to investors. He doubled the price of ACC cement from like mostly from rupees 13 to somewhere around 250. So he inflated the stocks, and how that's how he played. And then a famous journalist, Miss Suchita Dalal, she came into between, and she makes sure that all the criminalities or all the inadequacies of the system, the banking problems, they should come to the government, and the government should make any legal action for the investors and for the discrepancies made by the investors like Harshad Mehta. So that's how SEBI was important. At the time, SEBI was not there in 92, but the SEBI Act, after the coming of SEBI Act, lots of discrepancies have stopped. Lots of companies have definitely understood the importance of SEBI Act, and how it plays a proper governance fundamentalism for unifying the investors, understanding the grievances of investors. They are not being fooled, their money is not being taken into wrong hands, so and so forth. In this way, SEBI Act was also important. When we discuss Companies Act, we should also learn about SEBI Act in some or other way. Apart from that, now I think Companies Act nowadays has become more important because, like after 2016, lots of amendments were coming. Lots of every year the amendments are coming. In fact, like Companies Amendment Act 16, Amendment Act 17, 18, 19, and so forth and so on. Amendments keep coming every year. You can see the moment the union budget comes, and after a year, amendments also become applicable to each and every entity. All right. So there are organizations differently. There are different forms of organization when we study. There are partnership firms, there are companies, there are HUF, Hindu Undivided Families, there are some registered firms, there are some independent firms, there are NGOs. Lots of organizations are there, and the one form that is a company for discussion for the today first company. So we discussed about the applicability of law. Actually, Companies Act itself has 400 plus sections. Many of them are already deleted from the statute. So, but some of the sections keep coming from time to time in the official gazette, and they become very important for the operations. And one such a important section that I remember from the Companies Act is Section 135, corporate social responsibility. I think any company who is running the operations in the field of profit or in the field of corporate, they do have to make 2% of the contributions of their net profit of the average of last 3 years. Okay. So when we talk about Section 135 of Companies Act, I think which is one of my favorite from the entire company law module is that 135 section, because how companies do contribute to the nation, the society, the demography in which that is surrounded. Because if you feel like a responsible citizen of your country, when you understand from that psychology, you'll feel that, oh my God, this XYZ private limited earning lots of whooping profits of crores and crores every year. It's making millions. But what it's doing for our society, it's taking water from us. The industry, the company is taking water, it's taking it's giving us the polluted air, polluted water, lots of pollution, lots of things. It's taking away from the natural environment, what it's giving back to the society. And that's how Section 135 was introduced in the Companies Act. It simply says that how a company has to give back to the society, how it has to how it has to do with the operations of responsible society as an entity, and how the entire profits are not there on the hands of the corporate big billionaires. 2% of the average net profits of last 3 years are required for them to spend on the activities of social welfare, okay, every year. So that is the compliance of CSR, which is corporate social responsibility. So I think that's very important. I think that's very important for us. Now, coming to like why we should go into the fields of company law, why there's a need of company, why there's a need of company secretaries in India. What's their function? Why do they are responsible or secretarial auditors of the nation? So, a secretarial auditor is no one but a company secretary who actually deals with the operation compliances and all the management regulations of following a better, transparent laws and order in a company. Because a lawyer cannot do the operations of a company. Of course, a corporate lawyer can do, but a specialist, for example, if a skin problem, there's something wrong with my skin, I'll go to a dermatologist. I'll not simply go to a doctor. I simply will go to a particular doctor who is specialized in the skin disorders and who is normally called as dermatologist and not a simple name, an MBBS or a BHMS doctor. I'll go to MBBS, MD, MS, or maybe someone who is skilled in dermatology skills. I'll go to that doctor. So simply when we talk about corporates, when we talk about incorporating a company, who knows the spice one, who knows the incorporation rules, how a company is formulated, how company is made, what are the procedures of incorporation of company compliances to be made, we will go to a company secretary. For example, if I have to go and get audited my financial statements, for example, this is an NGO, okay, and this NGO has to audit its financial statements, or they are true or fair or not. So they'll go to a chartered accountant. So in this way, company secretary are also assigned a different role in society, and they are only themselves accountable to understand the legal requirements of Companies Act 2013. So similarly, what they have to do is that they have to maintain transparent and true and fair rules and regulations of all the operations going on. There are different organizations who themselves are actually looking for company secretaries, and this if there are students in the session, they should know that this career, this opportunity, or this profession in itself is booming. Lakhs and lakhs of students, they appear for company secretary examinations and then learn what are different laws that are important for us to understand as a company secretary. We we believe that why this particular profession came into picture in this way. Like CS, company secretary profession is also building day by day, and people are actually looking forward to make their careers in the compliances sectors, because not only in India, also in the global scenario out of India, which is maybe UK, USA, or some other countries, they also have a compliance officer with their companies, either it's MNC or if it's a private company. Definitely, you'll find that each and every organization has a separate legal and compliance department, wherein a compliance officer is also designed, who is there responsible to look after the operations of the compliances part. They'll not look after some other part, they'll look after the compliances part only. So, this is how the importance of company secretaries is also there under the context of Companies Act, because that's how they are being empowered in a certain way. All right. So coming to the second topic for the day, that is importance of GST, that is goods and services tax. What is GST? Okay. So first of all, I'll just give you some history of GST, how it was how it came and from where it came, what were the dates, how it was so important for us to understand that GST is important in the global, or in fact in Indian scenario, because not all countries in the world are definitely having GST, the goods and services tax, with them. So
Now you are
company
there.
secretary profession is very much applicable abroad, because there are also companies wherein the operations are needed, the compliances are there to be made in terms of the government of the respective country. So, when I talk about United Kingdom or UK in person, so simply means that UK is a country wherein Company Secretary of India is not accepted, certification of India is not accepted. However, you can enroll for a different course, and some modules or some papers of this course of India Company Secretaries, you can get exempted, and that's how you can give exam and of 2 3 exempted papers out of which, and then you can definitely be practice as a company secretary outside India also. But the same qualification is not accepted. You have to pass on a different certification when you move abroad for any typical country, maybe UK or USA. All right. So if you have any questions apart from this, you can definitely write in the chat box, and I'll take care of it if it's related to the topic for today. And even if not, I'll try to answer them with my best. If somebody is stuck with their career choices, or if somebody wants to know more about the Companies Act, or if something that's of kind is hitting you, please feel free to share it in the comment box, and or else at the end of this session we'll ask you to unmute and ask your question one by one. I think that would also be a wonderful idea. So beginning for the next topic of the day, that is GST, goods and services tax. What is it? We often go to restaurants and hotels and we do buy products, services, we do buy gold. There's a bill, there's an invoice wherein it's clearly written that 18% GST, 9% GST, CGST, SGST, GST says. So these are the things that you've often heard while purchasing, while moving out of market, or during buying the groceries for the day. And you might have also heard this topic GST comes around those who read newspapers daily. They must very well know that this term GST comes around in the headlines very often. Mrs. FM did this today. Nirmala Sitaraman has around different laws for GST. Some amendments are made. GST Council had a meeting. So these all highlights you have heard some or other day in the context of GST. When you are interacting with someone, when you're reading a newspaper or simply a television, a show, and especially it comes when there's a time of announcement of budget, that is March, or that is during the February month. So if you found that GST, then I think this very topic is going to helpful to understand what GST is and how it was implemented. So let's go back to a little background and understand the history of GST. All right. So yeah, GST was formulated back in 2004 by the Kelkar Task Force. Kelkar Task Force was one who proposed GST, and then eventually there were in 2007, 2014 constitutional amendment bill came, but none of the bill was proposed, or none of bill was taken into recommendation, unfortunately. But however, France was the only country in the world which in 1954 GST was already implemented. But unfortunately not India. It was France in 1954 where GST was already taking place. GST had terribly a long journey from like 2004 to 2016, 17, and finally, GST came in India. All right. So as per different laws, there are different dates, and GST definitely was applied on 1st of July 2017, but it was already implemented in 2016. So like it's not just more like 6 to 7 years, and not more. It's just 2023, and GST came in 2017. So it's not too old legislation, but it's an important one because lots of operations and lots of what happened to my system? Yeah. Lots of businesses and lots of companies do suffer the implications of the formulation or the application of the GST. Lots of businesses, not only one, from retail sector to business sector to different sectors have a different hit, and that's how it actually implemented. So for now, GST is levied. Thank you so much, Mohammed Malam. Thank you. GST is levied on all the goods and services except 5 petroleum products for now. All right. One is petroleum crude, high-speed diesel, and natural gas, aviation turbine fuel, and motor spirit. So these are 5 things wherein GST is not applicable, and apart from that, GST is applicable on all the products. Now, tobacco and tobacco products. They definitely have central excise duty and GST both as a legislation on them. But apart from that, all goods and services, they just follow a concept of single legislation. Now, there were different amendments that took place in GST also, because GST had several articles. One was one was Article 256, which has, wherein the state legislature or the union and state government both have rights to make the laws for the purposes of GST. Now, 7th schedule to Article 246. 7th schedule to Article 246 means that there are 3 kinds of list. How many? 3 kinds of list. These are union list, state list, and concurrent list. Okay, so there are 3 types of list under 7th schedule of Article 246, and the state list, the concurrent list, and the union list. So state list definitely has all the powers encountered by state government. And concurrent list has the power of both central and state government, and union list is only solely authorized by central government to make rules and powers, and has all the powers exclusively to make laws. Now, significant amendments are taken from time to time, and you know, VAT was a concept in India back then, and still VAT is there on some commodities and some kind of goods. So VAT means value added tax. There are some products in India wherein VAT is still going on, and some of the products don't actually have VAT. There's only concept of GST. Okay. So I hope that you're all clear that the questions I'm not going to take now, you can ask in the end of the session, because I think that would disturb my entire content right now. So the with the advent of GST, the economic structure of the country got simplified in a certain way, because earlier what was happening was there was double taxation happening. Now there was also a cascading effect wherein tax on tax was levied. Okay. Union government was also levying tax. There was a state government which was also levying tax. There were lots of taxes: entertainment tax, VAT tax, this tax and that tax. But what happened on the advent of GST? All the taxes got simplified, unified, and this how one tax, one nation concept was introduced. And there was also a boost to Make in India initiative after the advent of GST. There were lots of economic benefits, and there was a unified national market for the revenue purposes, because indirectly what happens, what do we mean by tax? Tax is the amount of revenue that is collected by the government for the purposes of development of its citizens. Okay. So all the citizens, all the people like you and me, we go through development, lots of demographical factors. There are roads being constructed, there are hospitals being constructed, there are temples, there are lots of cultural and educational activities that took place. From where does this funding come from? So this funding definitely comes from the government in the form of taxes collected by them on the earnings, on the incomes of us. So there's also a concept of income tax, but that's not the topic of today's session. So I'll just keep it little away from the discussion so that complications are not being arised. So first, simply we'll understand this GST for today and not income tax, but that is also a way of revenue generation for the government. Now, after the advent of GST, there was an easy trade and taxation compliance. Compliances were very, very easy. All right. So compliances of GST were very, very easy. For example, there's a very famous concept of ITC, input tax credit. Like every stage of tax you pay under GST, you are definitely are eligible to get the credit of that tax on a different level of purchase. For example, if I'm buying certain goods for my business, so I'll pay some tax for it, and the same tax or the same amount will be utilized by me next time to adjust against my purchases, or when I do a different transaction. So at that time, that amount of input tax credit will be adjusted against the input tax liability. So it will be reflected in the electronic credit ledger and on the GST portal. So there's a different portal, GSTN, Goods and Services Taxation Network. So we can easily see the input tax liability, what is the amount that we have to pay, and what's the net tax liability of any taxpayer. So this is how it is very much simplified nowadays. I personally believe that GST was one of the very, very amazing step taken by the government of India for unifying the taxation, for implementing better tax practices, because there's a concept of composition led. There's a concept of input tax credit. That's one of its amazing concept. And then there's a concept of, a registered seller. Everyone is required, not everyone is required to get registered in the GST. If you're falling in certain limit of taxation or certain limit of turnover, then you definitely have to get yourself registered under GST. Then you have to take a GST registration number. Okay, so there's a scheme of composition. Now, what is the scheme of composition? Composition scheme means that if you have a sale of 75 lakhs or 1.5 CR, so these are the two limits, and they keep on changing with amendments. So yeah, I have to check with the recent limit, but earlier it was 75 lakhs and 1.5 CR, 75 lakhs for special category states and 1.5 CR for normal states. So composition scheme simply means that you don't have to pay the entire 18% of the GST. You only have to pay a nominal amount of GST from 1% to 2.5% on the entire value of the goods you are sending. And in that composition scheme, you are not eligible to take the input tax credit. So it simply means that you would be having no credits of GST, and you will only directly pay the taxes to the government. So this was a very, again, in the GST laws, which is composition levy composition scheme, and many small taxpayers are being benefited from this scheme. Small taxpayer who have lesser revenues or who have lesser profits are being benefited from such scheme. So these are some important things that were there in GST. There's also e-challan, wherein a transport when there's transportation happening, so to avoid the corruption between the sellers and during the transportation. So there's also concept of e-challan, electronic challan, electronic system. So electronic challan system, wherein a system generated challan is been raised on the GST portal, and that is valid for like 2 days, and that's how you can definitely trace the operations of your goods and services that are being taken from one place to other. There are lots of rules related to time of supply, place of supply. Supply is important event under GST. Supply means that the application of GST, when the incidence of applicability is coming. All right. So there are different exceptions wherein GST will not be levied and when it will be levied. So like that. So I think we are at the end of the session now for today. So if you have any question in the meanwhile, I'll be more happier to answer.
Yeah, it was really a wonderful session to have with you and to know more about GST and the company law. There are few questions which has been answered by you only, which are there in the chat box. So if any information you can give that, how does GST is going to helpful in the market current scenario, the upcoming students are going to enter the market, how they should keep an eye on the GST and eye on the company law.
All right. Okay, I'll definitely answer. So yeah, GST simply means that you're going to pay a certain amount of tax on any commodity, any goods, or any services that you are taking place. And the information of GST is important for you because as an important citizen of India, you should know where your money is going. All right, where you're spending your money. For example, if I'm buying a watch of 10,000, for example, so on luxury items there are heavy rates of taxes to avoid taxation effects and to take more and more taxes from the rich people and spend it on the poor people. So for example, if I'm buying a watch worth rupees 10,000, a luxury watch, and I'm paying like 3,000 or 4,000 of whooping GST on it. So as a responsible citizen, I should know that where my money is going. Okay, in what hands my money is going and why my money is going. Because for me, buying a 10,000 rupees watch was my expenditure. It was my money that was being invested, and from there also government is taking 3,000 or 4,000 rupees. So isn't it ridiculous? So I should responsibly, as a common person, I should know that why was it taken away from me. All right. So this is the way how we can understand GST. For example, right now petroleum is not covered under GST. We definitely use vehicles, we use cars, we use bikes, we use scooters. Nowadays we use electronic bikes also. So currently there's no GST on petroleum or petroleum products, but it can be there soon in the future. But right now, as per the notifications of GST Council, it is not there. But it is soon going to be there. But we should know that if a petroleum person or if somebody in the petrol pump is asking us to pay GST, is fooling us. Okay, I'm taking 110 rupees from you and give me 50 rupees more of GST. If somebody is doing this kind of malpractices, then you should know as a responsible citizen that GST is not there in India on petroleum products. So why am I going to pay? All right. So this could be the way how GST could be helpful. And for those who are interested to learn GST or those who are interested to learn the subjects like GST, they should definitely learn, because in almost all commerce subjects, like bachelor's of business administration, bachelor's of commerce, courses like chartered accountancy, courses like company secretary, courses like uh, cost and management accountants, all of these courses definitely do include the subject of GST. They include subject of indirect taxes, company laws, and other laws. All of these are required to study at this kind of courses, and who is somebody who is not from these backgrounds should also know it, because at the end of the day, when you enter into the market, when you enter into the industry, when you go out and buy some stuff for yourself, you should know that you're not being cheated, you're not being fraud by some, businessman or someone. So if you know that the fundamentalism, you'll not be anywhere cheated. So that's just a point of getting more and more information of, learning about the topics like this. So I hope that I'm clear about this.
Thank you so much, ma'am, for such a wonderful interactive session with you.
Yeah.
Now, talking about, like, it was a great knowledge having you with us. So I hope that our audience learned many new things with this from this session. Once again, I would like to thank you for joining us and sharing your experience, your precious time and knowledge with us that has added an extra spark to the event and made it even more special. Thank you so much, ma'am. It was a wonderful session. Now, there were few questions which you have already answered, which the participants had asked you. So, with your permission, I have few more questions to ask from you. So, shall I?
Yeah, sure, you can.
Okay. So, ma'am, there was a question like why VAT got replaced by GST?
Okay, all right. So see, when I talk about VAT, or VAT is simply a value added tax. Value added tax means for every value addition there is a tax. For example, I want to manufacture a bread, simply a bread. I am a bakery owner and I want to manufacture bread. So the cost of bread's packet is 20 rupees. But when I buy the flour, when I buy the raw materials, is it like, for example, it costs me around 10 rupees. All right. So, like every value addition I'm making to that product of bread, for example, there's a flour of rupees 10 rupees kg is a wheat flour, and to that I'm making a value addition. I'm putting, 2 rupees of salt. I'm putting 3 rupees of sugar. I'm putting 2 rupees of baking powder into it. I'm putting the packing charges into it, and in this way, every value addition is being made to that product. And simply VAT means that for every value addition at each step of production, there's a separate component of tax charged. So that was what was happening in VAT. But now somebody asked why VAT was replaced. Okay, so you already got the idea of roughly how VAT used to work earlier. Now comes why it was replaced altogether. So it was replaced by GST because VAT was actually causing double taxation, means tax on tax, so that was a disadvantage or a loophole in the Indian taxation system of the indirect taxes, where the government found that the people are being charged because GST is taken by us only. It's not paid by any sort of shopkeeper collects from us and then they pay to the government. So that's why it is called as a type of indirect tax and not a direct tax. Direct tax means which is paid by us on our salaries in the form of income tax that we normally file income tax return at the end of every financial year. So that is a different concept. I'm not talking about it here. I'm talking about the reference of VAT, why it was replaced by GST. For example, if I am just manufacturing something, or if I'm adding different value to my product, why am I required to pay tax every time I'm doing an activity of production? Is it in so harsh, so ridiculous that am I required to pay tax so many times again and again on the same product or same production step of a product? Is it so wrong? Is it so illegitimate? So for that reason, government felt that there's a need of unified taxes. There's a need of one system of tax. And that's why they introduced GST, wherein only you have to, they charge tax on the entire value of goods. For example, it is rupees 20 rupees bread's packet. So they will charge 9% or 18% depending on the product. So only simply you have to pay one time of tax to the government, and that has been taken by customers and directly paid to the government. And there is no double taxation happening, tax on tax at every stage. That's how it's simply traceable. We can find out where that money is going or why it's being charged extra. So in that way, the commodities are also way more cheaper, and we can easily trace the cost of that commodity. So I hope the question was answered well. Any more questions?
No, ma'am. Thank you so much. Ma'am, it was very effective for our audience and it it is a very good piece of advice. Like whatever you have said with us, and you are with us from past 1 hour, it was very interactive and it was very fruitful for us. Thank you so much, ma'am, for answering all the questions, be the participants' questions or from my side.
All right, thank you so much once again, Namneet, and it was a lovely session with you all, and I really enjoyed the session, and you all were so cooperative and so amazing audiences. So, like, yeah, I found really the session was so insightful, and I once again thank all the organizers who were the part of this organization, the wonderful organization who actually made it very much interesting and very much successful. So once again, thank you all of you.
Again, thank you all for attending today's webinar. And if you have any additional questions, you can contact us by email or telephone. We are happy to provide additional support to you.